was just noticing yesterday, actually, how the market is really tightly wound. We can see here going back to June, we've got this really tightly wound market here. It's been caught between the 200-day moving average here and basically this upper high, new high, well, not new, but upper, market high price here. Something's going to break, and especially if we look at the weekly chart here, we're really getting tightly wound here, and something's going to break. And it really, really looks like a perfect setup to break to the upside here. This is a lot easier to see on a weekly chart here, but if we go back to last year, we have lows set up last year, roughly here where my cursor's at, right? And so recently, within, from June on of this year, these higher lows have all been higher than last year's kind of set low here. So from a market technicians or a charting technician standpoint, is very bullish signs that this year, we've got this good base set up here of higher lows, bouncing off of this 200 MA, and they're all higher than last year's basically low support area that we have kind of set up around 2600, maybe a little bit lower than 2600, but 2600 is this nice, perfect, rounded number that technicians like to see, right? And then we do have this low that broke through, and again, from a technician standpoint, looking on a weekly chart, this was a perfect pullback. So to the 200-day moving average again. So even on the weekly chart, we had this nice deep pullback. So that way the big guys can accumulate, more stocks down here at a better price, and still upholding the 200-day moving average on the weekly chart. So another very strong bullish indication here that the weekly chart is holding up. Even though this did break prior lows, it's okay because we held up that 200-day moving average. And then, looking recently, we've actually held up, this kind of basing here from last year around that 2600 level for these higher lows that we've established here. So bottom line is, it's a very bullish looking sign, but at the same time, the markets have just been caught in this difficult situation, right? We have elections coming up, which the markets, on average do not like a new government coming in, because they never know what's going to happen with this new government. Does it mean higher taxes? Does it mean more regulation, which means more cost of lawyers and bean counters that companies have to hire? So it means a little less profits, right? And of course, the trade talks, with China and Europe and, everywhere, the global thing. So, there's some big headwinds. So we have this perfect kind of setup for breaking higher, and continuing on, so if we look at the weekly chart, right, we've been getting like a couple of years of consolidation and then a couple of years of, the moving higher. And now we're in this almost 2 years of consolidation again. And so from a technical charting standpoint, looks like, we're in this perfect setup for another couple of years of moving higher. But again, there are major concerns about the elections coming up and about global trade issues. So who knows? This could easily turn into just an epic failure of this winding up that we have. So definitely, I think if we don't break to the upside and this fails, then we're probably going to see a break below the 200-day on the weekly chart. We're probably, at the very minimum, we're probably going to come back to the low set last December here. Yeah, at least we're going to come back to here, and maybe even lower. But again, even if we come back here, that isn't necessarily a negative. It's just showing that we're not done consolidating here, for the next year or so. Maybe we need another year of consolidation, or maybe the markets need to consolidate until we get through the 2020 election season, and the markets can kind of discover and decide, do they like the new government? Is there something to be worried about with the new government, or is the new government just going to be the same status quo? And in which case, we're off and running higher again. Yeah, 2020 is going to be pretty interesting to watch here. So I think there's a good chance that we might get a scare, but if you look at the bigger picture, it's probably just staying within this consolidation range. Admittedly, this is a huge consolidation range that has been established this year and last year. But again, if you look back, going back to 2014, right to 2016, again, it was a much tighter range. But again, going back here, we were ranging, and then once we got through the election cycle, basically we were off to the races, and up we're going. And I think there's a very good chance that we're going to see the same thing, although we're just in a much wider range here. And so things are probably going to get a little scarier, with this much wider range if we pull back to these prior lows, and maybe, who knows, maybe even a little bit lower. So, yeah, I guess probably the advice that money managers would give you is, keep some cash on hand to buy at some better prices.